Everyone, thank you so much for joining us today. Liz, do you want to introduce yourself and what you do, and then I'll kick it off, and then we'll have Howard introduce himself.
Absolutely. So my name's Elizabeth Converse, for those of you that I haven't met yet. I'm the executive director of Utah Tech Leads, and it is my job to take all of your input and make it actionable items for the community. So that's what I do in short.
And I am Sunny Washington. I'm the CEO of Utah Tech Leads, former entrepreneur. So this actually situation hits very close to home. I know the stress that a lot of you guys are under as founders, but also people who are part of early startup teams. So we're so glad to have you here. We're grateful to have Howard Headley here over. And Howard, if you wouldn't mind taking a moment to introduce yourself and what you do for the state.
Hi, Howard Headley. I'm the president of the Utah Bankers Association. So, an association of all the banks in Utah. I've been doing this for 25 years, and I started when I was 12 or so. But it's been a long time, seen a lot of different things, and just happy to be here to answer whatever questions I can.
Great, thank you. So Howard, I don't know if you know this, but I started off as a teller. It was one of my first jobs. I love to count money. Like physical cash is like something that I really enjoy doing. So I appreciate you being here. And it looks like we've got Congressman Stewart. Curtis is going to be joining us shortly. Let me just let him in, and we'll let him introduce himself. Congressman Curtis, are you there? That was my first Zoom bomb, what I was going to tell everybody. So sorry about that. So let's go ahead and get Congressman Curtis. Congressman Curtis, can you get on? Are you able to? I see you're in, but you're muted and your screen is off. Let's see.
Okay, I think we can just go ahead and get started. And so this has been a really interesting experience. I think there's been a lot of panic over the past week or so, more so towards the end of the week. We're here to talk a little bit less about the panic and a little bit more about what the next steps actually look like and how we can have the most success out of this issue that we're all dealing with. So there's 200 employees in the state of Utah from Silicon Valley Bank, which I was surprised that it was that high. Regulators have stepped in. People are getting access to the funds that they have that are insured. And the Fed has said that that all depositors will be made whole. So Howard, can you tell us a little bit about what that actually means to be made whole for the depositors?
Well, obviously, this is something that's relatively new to us as well. So as everybody knows, your deposits up to $250,000 are insured. And that's a self-contained insurance fund that's maintained by the banks. We pay premiums on all our deposits every month for decades. That money's never come from the government. The government's never had to step in to replenish that. And the bottom line is when the regulators come in and close a bank, usually there's a couple different ways that can happen, but they usually do it at like 5 o'clock on a Friday night. And by Monday morning, you'll have access to your money. So they give the weekend to kind of work through their internal issues, and you have access to your money up to $250,000. I won't go into a lot of details on how this works because it's not relevant here. But then they go through a process over the next weeks where they liquidate the assets of the bank. And when I talk about assets, I'm talking about like the loans that a bank would have, or the securities and the investments the bank would have. And they use that to meet the liabilities. The liabilities of a bank primarily, are your deposits. It's what we owe you back. So it's our liability. And that confuses people sometimes. But so the FDIC will liquidate all the assets of the bank. they'll take a good loan to, a good company, and they'll sell that loan to another bank, and that another bank will say, hey, we want that loan. And so they'll buy that loan. And the question is, do they buy that loan at par? Do they buy it at a discount? Is there enough bidding that it's a premium? Typically, that's not the case because you're doing it quickly. You have time to underwrite the loan and look at it. But so theoretically, in a balance sheet scenario, you have assets, liabilities, and equity. Well, the equity folks are wiped out. So they're gone. They don't get anything. They get wiped out. So theoretically, you should have enough assets to cover those liabilities, but you just don't know. And it takes time to work through it all. And so what the FDIC does is says, we insure $250,000, then we're going to go and liquidate these assets. And if it's enough to cover your liabilities over the next several weeks, months, you'll get your money back, potentially all of it. They'll do an assessment. So let's say the Monday morning after a bank failure, everybody gets 250,000, up to, if you don't have 250,000, you don't get it, but you get up to 250. And then they might even say, we've looked at the assets and we've evaluated it, and we think we're going to be able to pay out X. And so we're going to give you an advanced dividend on that of, say, 50% of that right now. So you would have had some money of that to begin with. And if things went well, you could have had it all. Now, Silicon Valley Bank was a pretty good bank. It was not going to fail. And so the assets, the loans that they did have were, we think, pretty good loans. The securities that they had, and that gets to some deeper weeds with the rising interest rate environment. Some of the securities that they had bought, as interest rates went up, those securities were discounted, and that's kind of what drove the speculation on Thursday. But the call to pull all the money out of the bank on Thursday by a handful of the folks who were involved in some of the deposits was a huge overreaction, in my view, and a real tragedy, because Silicon Valley Bank was a great bank and they served the needs of this community so well. And you're going to miss that. We're all going to miss that.
Right.
So that's how it would have played out. So now the FDIC is saying everybody's going to have access to all their money on Monday. Typically, that only happened if a bank were to come in and on like Friday night and buy the failed bank, and it would have just opened on Monday under the banner of that new bank, and everything would have gone on normally.
Right.
That didn't happen, and that's what got everybody concerned. But the FDIC is now saying, but that's going to be how we're going to treat this. So I'm actually interested on this call to see if there's anybody, what you're experiencing, because I haven't ever experienced what they say they're going.
Howard, that's really helpful that you said that, and I think we'll ask for questions. I want to get through some of the things, so if you have your questions, please post them in the chat. I think we have Congressman Curtis. I've done that twice now on the phone, and I just want to make sure that you're here if you're able to unmute yourself and hear us. Okay, I don't see him. Okay, we'll just go ahead and continue on. And it's great to have you on here, Howard, just because you are such an expert in the banking industry and have a long history there. And I think it's great for us to kind of level set at where we're at. One of the questions we have is, there's a difference between state and federally regulated banks. What was SVB? What was Silicon Valley Bank?
It was a state chartered Fed member bank. So there's really no difference to you or anybody. FDIC assured bank is the same to the customer no matter what. So I don't know how important it is to go into all those details, but they're insured the same, they're regulated the same. It's just who does the regulating can be different. And that's a good thing, by the way, but it really shouldn't make any difference to the user.
Okay.
So specifically with the FDIC insurance, I found it really interesting that we don't, it doesn't seem to me that on the federal level, we are actually reviewing those caps pretty regularly. It looks like the last time we increased the cap from 100 to 250,000 was 15 years ago. And I know that the president has said some things, whether or not those are actually viable or doable in this circumstance, we have yet to see. But what is it looking like with those caps when you have individuals who are depositors who are significantly over that $250,000 limit?
Well, but as you all know, there's a cost for everything. So we're insuring those, and that cost to be paid. And in this case, all the banks in the country are going to pay for this. So let's just be honest. Everybody's talking about it's a bailout, a taxpayer. No, they're going to manage this within the FDIC fund. Now, if those assets are liquidated and it covers liabilities, there's no cost to the FDIC fund. That's not likely, but theoretically, if that happened, if they cover all those liabilities and they get some of the assets back, and whatever the net cost is, they've indicated what I'm reading tea leaves into the press releases, is that cost, then they're going to assess all the banks in the country, and we're going to pay higher premiums to cover that. So the fact of the matter is, we were going to be on here talking this morning about alternative programs where maybe local banks were going to lend against.
There was someone on that call who was speaking specifically about it took 20 minutes to log into the website. It took even longer to see their actual balance, and they still haven't been able to remove any funds, which I think that's kind of one of the biggest things that it seems like in the chat is happening. A lot of this can honestly be very difficult for people who are trying to run payroll. How have you seen other founders kind of react to this issue that they've been running into?
Yeah, I mean, listen, I have a lot of friends who are hit in the middle of this. I mean, I'm a former SVB customer with my last company. Your one job as a founder is to make sure that people get paid. And that's all you need to do. And so when there are hiccups in terms of even it just being late a day, I mean, that disrupts people's lives. So this was, I was feeling, the pressure on everybody to kind of not only just get some of the immediate needs taken care of their employees, but also long-term needs, and what that means if they're only getting 250K back, what that all means. And it puts everything in kind of upheaval. So, there were a lot of us, talking, thousands of messages over the weekend and sharing resources. So it is very stressful. And I feel for these founders that are caught in it. Howard,
Can I just say something?
Yeah.
So we know how it's supposed to work. So they're saying
Yeah.
they're going to give you access to your full deposit. So, and it looks like in the chat, so if people could share in chat, that's really helpful to me, what you're seeing. And I appreciate those that have shared. So it looks like somebody is able to at least see their balance briefly. That's reassuring. In terms of accessing the funds, I've got a Zoom call in about 40 minutes with the Treasury Department, the head of domestic affairs. And so anything that you can share with me here, I'm happy to raise with her and try to get some answers. And then I can come back to you and share those with you this afternoon. You can send them out to your folks, but just any intelligence I can get would be very helpful.
Yeah, that's great for that. And understanding what we need in terms of allowing for now, we know what the kind of the situation is right now. We understand that there should be the access to the capital. I'm getting a lot of personal emails from other banks now, Howard, saying, we have 3 million in FDIC insurance now. What does that mean? I mean, if it's 250, why is it 3 million now?
This is a great discussion, because the big issue here driving it is that Silicon Valley had all these deposits that were uninsured. And it was really the highest I'd ever seen. It was like 90% of their deposits were insured. That means you had an account with $10 million in it and only 250,000 of that's insured. And that's really unusual. And I got some insights as to why that's happening. But in a lot of banks, the banking industry, there's a lot of private sector responses to this where you can what we call reciprocal deposits. So you go into your bank, you say, I've got $3 million, but I need it all to be covered. And they put it into a reciprocal relationship. So they end up farming it out with banks all across the country. They'll send a bank 250, that bank will send them 250. They interchange. And so that ends up that all the deposit is insured on a reciprocal basis. Again, that costs a little money, right? It affects the return you get. And people don't maybe not want to pay for that. But I guess if you gave them that option last, Friday or Saturday, they wish they had taken that option. And, right now it looks like the banks are going to cover the costs of all of this, but I don't think that's a long-term solution. Our focus is on helping, the average person, and covering 250,000 covers the average person. I know I didn't lose any sleep over the weekend because I don't have that much money in the bank. Yeah. So it's going to come down to how much does it cost, who's going to pay, but that option is there for you right now. If you talk to a bank, they can figure out a way to get all your money insured. And I don't know why Silicon Valley Bank didn't build that, reciprocal network. Yeah.
Well, I mean, you talked about SVB being a great bank, and, for all intents and purposes, a lot of us had great experiences working with SVB. The one vehicle that they did provide that was really useful to a lot of founders was the venture debt piece. Are there other organizations that are thinking about venture debt or have venture debt vehicles that we should be considering that you're aware of?
I'm not aware, but if I was, I don't want to, I represent all the banks. So I try to,
okay.
But I know a lot of people are looking at stepping in and serving that. And so you just need to be communicative as to how that, what it is you need from a bank.
Right. And I mean, really what it was is having access to that cheaper capital, as many of us were growing our companies. We might not have huge revenue numbers, but, the growth trajectory was good for us. That venture debt vehicle was a lifeline for a lot of companies. And so it's tough to see that go away. Now, Howard, we've got a lot of people opening up new bank accounts, establishing new relationships. Are any thoughts between big banks and regional banks, and is one safer than the other now?
Well, I think actually after this weekend, you can pretty much say no. This whole idea of too big to fail is, there's been a lot of resistance and back and forth. But I think what we've seen here is that the regulators have stood up and said, we're gonna protect everybody. And so, I guess the answer to your question is no. And fortunately in Utah, you have a lot of options. We're the 6th largest banking state in the country, and we have all the varieties here to choose from. So,
and when you say the 6th largest bank, how do you calculate that? What does that mean?
Assets under supervision and assets headquartered in Utah.
Oh, interesting. So a smaller state like Utah is the 6th largest in terms of assets.
Yeah, we're clearly the best state in the country to operate a bank. And so banks have come here. So SoFi brought their headquarters here. Lending Club bought a bank in Massachusetts, brought it here. You got banks like American Express and Ally, Morgan Stanley. UBS's bank is headquartered here. So of course, we have the local, Zions is headquartered here. You have Chase and Wells and Key. See, now I've got to go through the whole list.
Yeah,
you have a lot of really good community banks here, Alta Bank and Bank of Utah, Central Bank. I'm going to miss somebody, but you have the whole range of options here, and including options that most other states don't. So that's good news today.
Yeah, yeah, okay, that's great to know that in our own state, we've got those roots here. So, now I think a lot of us took for granted where we banked at. And, for, especially venture-backed companies, banking at SVB was pretty standard. Your investors banked at SVB, your founder friends all banked at SVB. And so there was just never, I'm thinking about the time that I had an SVB account. I didn't think anything of it. At the time, this was probably 2014, it had a smaller presence in Utah. I didn't look into the metrics of a company. I think people are thinking a little bit differently now. And I know that there's things like safety of assets that a bank might publish, or their CCAR for stress testing. What are the things that you think that as founders we should be looking at?
Yeah, I don't.
All of it?
After this weekend, I probably look at that a little differently.
Yeah.
Just that concentrations on the deposit side, I would have never have thought what happened last Thursday could happen. That a handful of people could put out the call to pull money out of a bank, and you could pull $40 billion out in a matter of hours.
Right.
To me, that was probably and that's probably something the bank regulators are going to look at, because that was irresponsible in my view that happened. And it was a, misreaction from, what was happening. But the regulators really look at all those ratios and all those details all the time.
Mm-hmm.
And we have to operate our banks within a pretty narrow plan. So I really think the most important thing for people to look at is, the products and the service and the customer service. We had somebody talk about, the ability to make a phone call and get an answer. That it's a personal relationship driven thing. In terms of the safety and soundness, again, those details are really focused in on by our regulators. So I don't, I'm as much concerned about the concentration of the lending and the concentration of the deposits as I am about the management, because we got regulators looking at the management and forcing the management to operate within some pretty tight windows.
Right.
So I don't, that's probably not a great answer for you, but it's really just finding a comfort level of somebody that you can build a relationship with over time and reach when you absolutely have to talk to somebody. Like right now, if you can't see your account, you can't figure out your payroll, you need to be able to get somebody on the phone or walk in and see somebody, get an answer.
And I think just so that we make sure that everybody is aware, we have many of our members who are also members of the Utah Banking Association that are offering short-term loans very specifically for that. If you are in dire straits or in need, please feel free to reach out to Sunny or I, and we are happy to direct you to those people who've already reached out and let us know that they are looking very specifically to make those kinds of loans.
And Liz, I don't know if we've got our Representative Congressman Curtis.
Yeah, he's not going to be able to unmute. They're having some technical difficulties, but
And
it's probably just a congressional phone issue, as we saw this morning as well. So
can I just say, Representative Curtis reached out to me late on Friday. He's one of the best people I know. He was very concerned about what was going to happen in this space, and just spent an enormous amount of time, where you wouldn't necessarily expect somebody to do that. And so I was hoping the opportunity to thank him.
Yeah.
There was a lot of people working hard over the weekend to make sure that we were prepared Monday morning to provide options. The federal regulators ended up providing all the options, and like I said, the banks are going to pay for that through their premiums. But either way, we were going to make sure that people didn't. It's hard enough running a small business and starting a small business. You shouldn't have to worry about these kind of basic things.
Sure, accessing the capital that you have. I wanted to, we saw some dip in the markets this morning, especially targeting banks. What are your thoughts around that? Do you think that's just this, I mean, the markets are volatile, so of course we would react to that. But yeah, I would love to know your thoughts on that.
There's some great values out there. And if I wasn't on these Zoom calls all morning, I probably would have been buying bank
Yeah,
stock.
okay.
I honestly, if I could take all the reserves of my association and put it into my bank stocks, I'd have doubled my reserves in the next couple of weeks. I'm just fascinated at the reaction. I'm absolutely these are smart people. I know they're smart people.
Right.
Markets are really smart, but I know what's going on inside these portfolios, and I know how we're managing our balance sheets. And this is an unbelievable overreaction, and it created some massive opportunities at the beginning of the market. I haven't checked lately, but I'm afraid I've missed out on them.
Yeah. Well, there might still be an opportunity. One of the questions, and I don't know if you have strong opinions on this, and I know it's very early. Do you think that there is legislation that the state or the federal government should run? I know there was a lot of, I saw some talk about some of the relaxation or rolling back of some of the Dodd-Frank restrictions that were placed back with the last financial crisis. And I don't know if that's a direct impact of what happened with SVB, but do you think that there should be more restrictions placed or legislation that should be run on any level to prevent this from happening again?
Only if you could somehow prevent billionaires from telling people to pull their money out of a bank.
You mean stop Twitter? Yeah.
Let's talk about that for a second real quick, because I don't think people fully understand what a bank run is and how that happens. Howard, do you want to explain to us what a run on a bank actually is? That'd be fantastic.
That's pretty simple. People going in and taking their money out of the bank, and it's with FDIC insurance and the position of the regulators as it is, it's just not necessary. I remember in 2008, remember IndyMac was the first bank, during the crisis. And I looked over on the TV in California. IndyMac was in California, coincidentally, we'll just say. And people were like camped out in tents in front of IndyMac. And I'm looking at myself saying, Howard, you have failed. I have failed to educate people on how this whole system, but you don't need to get your tent and you don't need to get a sleeping bag.
Yeah.
And it just, if there's something wrong with the bank, the regulators are going to close it down, and there's going to be a transition, and it doesn't require you to really do anything urgently and quickly. But that's a run on the bank. And it doesn't matter what, you could have the greatest bank in the world, and if all the depositors go on the same day and take all their money out, there's nothing you can do.
And I think that's more to what my point is. No bank could have survived what had happened to Silicon Valley last week. Is there a way that Silicon Valley might have been able to handle things differently, or be aware of the chatter that was going around and maybe slow some of those funds being removed? I'm genuinely asking because I don't know.
Yeah, I mean, in retrospect, if you knew that you had 2 or 3 people that could instigate that big of a run on your bank, you probably would have been on the phone with them before you announced anything, before you did anything. But that's all hindsight. Why they reacted that way is another just interesting question, and I'm sure they're really smart people, so I'm sure they have an answer, and they're not here to defend themselves. So I'm not gonna, but we know what happened, and that's why the bank isn't here today.
Absolutely. So in a call this morning, there was some interesting questions asked specifically about the role of social media and the immediacy of contact that we have with one another, and how quickly those pieces fall, especially when an investment group is utilizing SVB and has encouraged their portfolio to utilize SVB. And then you have a text string, and how quickly those concerns can become a very, very large reality. And for me, watching this unfold, granted, I am not dealing with what the vast majority of those people who are dealing directly with SVB are dealing with. It's a matter of staying calm. And our financial markets are the most stable, and our financial institutions are the most stable when we're all able to keep a level head. And that's not easy to do in these kind of situations at all. But I do think that's one of the most important things that we can think about when we're talking about keeping Utah companies stable and keeping Utah's financial institutions stable.
Yeah. I think a month from now, when we look back 2 months, 6 months, when Congress starts debating, getting into the details of it, that Elizabeth, that is going to be the issue, is what impact now does this social media, this instant communication, what dynamic does that now bring to the table? And does this new Fed facility or FDIC policy, does the 250, those kind of changes have to be made in this new environment? Because those social media tools do a lot of really good things, and they facilitate some bad things, and this would qualify as one of those.
So I think a lot of the companies now are breathing a little bit of a sigh of relief. I think some of them are still in not great situations. I know how many times I've cut it very close. You could be in the middle of a raise or waiting for a big deal to close. What advice do you have for these founders and these entrepreneurs that are just, these are great people building wonderful products, and contributing to the economy and creating jobs. Tech is 1 out of 7 jobs in the state. And so, definitely if there was some sort of, catastrophic fallout of access to capital, that heavily impacts all sectors in the state. What advice do you have for us founders?
Well, I want to thank them. I want to encourage them to continue taking risks and making our world a better place. And I believe firmly that they should be rewarded for those risks. And to the extent that we can provide them the platform on which to take those risks, we want to keep doing it. And hopefully I know there's not a lot of margin for error in that space. And hopefully this weekend and today and tomorrow doesn't create something that otherwise would knock somebody off their path to success. But I'm really interested to see how this is working, because it's not something that we've seen before. So any feedback you can give me in terms of how, I can only imagine. We deal with the FDIC every day, all day long, right? I'm going to be careful, but they're not as good as you all are in terms of what you do. They're smart people. They regulate banks good, but I'm really worried about their execution this week, today, tomorrow. So any more details you can get me that I can then run up the flagpole. And my job, I don't represent any specific bank. I represent them all, but that means I can be the bad guy and I can be the mean guy. I can yell at people and they can't take it out on any specific bank. So I really just need to know how they're doing. Do you have access to your money? Are you making payroll? Can you continue to run your business? And if not, what do we need to do to make that happen? It's the same thing with PPP. It was when they rolled that out, it was a mess. And I just had to be constantly, yelling at people, to get things done on time. So.
Yeah, that's helpful. So I know Elizabeth put her email address in the chat. So you can send information and we can pass that along to Howard. Howard, what are you on Twitter? Do we follow you on Twitter to get your advice? Or
I've had some at HM Headley, HEADLEE. And you can see from my previous tweets, I feel pretty strongly about what happened last week and that it didn't need to happen. And my email is howard@utah.bank. So if you do have some suggestions or insights as to how this is working, please share them with me. Like I say, I'll be on with the top treasury person for the, for the domestic affairs in about 20 minutes. And I know she's looking for feedback. So
Yeah, that's really helpful. So I really appreciate you being such a stable sounding board and a stable voice of reason while we've been experiencing this chaos. Is there anything else that we could do for you as a tech community other than provide feedback?
no, you guys are, it's amazing. It's amazing how well Utah is doing through all the difficulties across the board. And we're just proud to be a part of that and just communicate.
Yep.
Open the lines of communication. I appreciate working with Liz up at the Capitol and keeping them from passing crazy laws on banking. That's really why we're the best banking. I mean, we are the best place in America to run a bank, and the legislature has a lot to do with that. They've created a great, stable environment for banking, and we really appreciate that leadership. And I know Congressman Curtis, I think he's on the call. They do an amazing job representing us back in Washington, D.C. as well. So we're appreciative to all of them.
Yes.
Absolutely. Feel free to reach out to me, everybody. We can connect you with Howard or with Congressman Curtis in his office, or with any of those financial institutions that we mentioned earlier that we are intentionally not mentioning by name. But thank you so much for joining us. Sunny, you want to?
Yeah, thank you and we'll keep apprised of the situation. So, and Howard, we might invite you back to do another session if anything drastic changes, but so appreciate your expertise and your time here. Sorry for the little snafus, but lessons learned. So, but you guys are all great, and thanks so much for supporting us.